Hotter inflation here, Jim, than I think the market expected. I imagine you may have expected. I don't know. What do you think of this?
Look, I'm looking at the futures and just saying buy. I mean, it's really incredible how you can try to roll back whole moves that have been put on for the last 8 days for a number that is why the Fed is going 0.75. Food is the leader. I don't know. Food could be stabilizing here. I question whether, after listening to Diana Olick's excellent report this morning, whether we're not seeing some relief in housing. We obviously saw relief in any sort of electricity. That's just per se. So we're looking at a company's stocks falling short, even as almost every one of the numbers I just mentioned will be lower 1 month from now. And I'm not concerned that the Fed's going to overdo it. That is a bogus thing. I mean, obviously, what I care about is that they stop this. We arrest things. We get it so that futures are not down 1.3.
Right.
I mean, what are we going to do? Is this the time to sell tech because of this number?
Well,
no, but that's what the market does.
Hey, Jim,
the market's so stupid, Andrew, it's painful.
Well, so Jim, we had Savita Subramanian on from B of A, who I think is actually quite brilliant, and she has a view. You may disagree with the view. She said, I wouldn't own tech right now. She said, I wouldn't own the S&P 500 right now, was her perspective. She thinks the Fed is going to continue to have to raise interest rates. She said this before we got this hot number. And her view is own industrials, own energy, and basically you don't want to own maybe a little healthcare, but pretty much everything else sort of off limits.
Has she looked at the price to earnings multiples? Has she seen that the more than 40% decline in the semiconductors? Has she looked at the average one of these FANG stocks, which is now selling between 19 and 22 times earnings? Is she looking at any of the compressed multiples that are because of exactly what we're watching? I'm not quite sure. I'm an individual stock guy. And I know that NVIDIA on the board is probably, that's 40 times earnings. The rest of these stocks are selling, most of them are selling Micron 6 times earnings, Advanced Micron 19 times earnings. The banks are big winners here. They've been winners here for weeks. No one seems to acknowledge it. People selling off. Why? Because there's a possibility that there's going to be an increase in defaults. There sure hasn't, and defaults are down as low as they've been. Look, if you look at the individual stocks, you just want to buy. If you look at the futures, well, get out.
But what's your sense of what happens to the multiple?
That game's over.
But isn't the argument that, look, if the Fed's
it's happened.
But the question is, it may have already happened. The question is it going to continue to happen, or is it going to just even stay flat where it is if the Fed is going to have to continue to raise rates at this pace? I mean, part of it is this optimism in the market that maybe they won't. And I'm not sure that is true anymore.
Well, I mean, if you look at the futures that we're watching on the board, the optimism's gone. They've erased everything that we've had in the last 8 days. Now, does that make sense? Because of a 0.2 inflation, actually 0.02. The reason this is happening is because it looks like the Fed is somehow behind the curve again. This nonsense has to stop. We've had a great rally from the bottom based on the idea that we are seeing not peak inflation, but inflation that can be dealt with by the Fed. Diana Olick's report, which is about rents coming down, is completely ignored by this. The idea that the Dow should be down 1.5. I want to know which Dow stocks should be down 1.5. Which ones? Look, I just need a name. Give me one darn name that should be down that much. Are we going to be ruled by the futures, which have been wrong for the year? Or are we going to be ruled by the individual companies, which are doing very well? You want to buy Disney at 113? Well, wait a second. No, I'm really worried about the Fed. I mean, what do you mean? I mean, what kind of broad brush action is that? This is not a Rothko. This is a Rembrandt.